growth segment so far. Though the health insurance grows at 20%, we believe the real growth rate that should be there to address the population should be something around 50 to 60%. It's like Indian GDP. Indian GDP, if they have to deliver some amount of prosperity to the entire population, we have no other option other than to grow at 8%. We have to grow at 8%. Only then the trickle down, the economy, the cash flows, there is an attraction at rural and semi-rural areas, and people would talk about prosperity. Similarly, we need to grow at 60% if we are thinking about growing. So there is growth, is a challenge now. First challenge is the penetration. Second challenge, my dear friends, which I'm mentioning, is the profitability. Third, from perspectives, the growth, real growth avenues. Third is, another thing which I would like to mention is the regulatory challenges. The Insurance Act Amendment 2015 has come out. It mainly talks about the FDI can go up to 49%, but there are many other items regarding solvency margin, financial status, distribution channels, ownership, the listing rules, the corporate governance, everything was there. Now the regulator has come out with all the regulations. Now there was an act, and the provisions of the act has been transmitted to the industry by regulation. Now the regulation spree is over. The last one, I think EOM and this thing is coming out. So now that's a huge challenge. Insurance industry have to really restructure, flexible, and become lean and mean to abide by these regulations, which is step slightly ahead of the market. Regulations are always slightly a step ahead of the market. To catch up with the regulation, we are struggling. In fact, the compliance department in each insurance industry, my colleagues from industry would swear, is becoming more complex and more complex and more complex. Are we deviating? Because the fine is now 1 crore. So are we deviating from the compliance? Are we on the right track? Is the board aware of the regulations? Are the executives aware of the regulations? Are we deviating? The systems, processes we put in place across the country, are they compliant with the deviation? This is an anxiety in the minds of CEO at every point of time. Every time of the man, the CEO has an anxiety because he is or she is personally responsible for this, not the compliance officer. So there is an anxiety. Is that there were a huge amount of regulations. The regulations about advertisement, there is a regulation about distribution channel, there is a regulation about holding board meetings, there is a regulation about solvency margin, there is a regulation on expense of management, there is a regulation on the agency commission that could be paid, or what could be paid more than the agency commission. There's a huge amount of regulation. Are we compliant? Challenge number 4. Regulatory compliance. This is a major challenge for the insurance industry. Next challenge, I don't know how the time which I have, maybe I have 5 more minutes, sir? Yeah. It's a digital adaptation. You keep on hearing about digital explosion. Today, my colleagues were, Kailash and Manish was talking about big data, analytics. Actually, probably the industry, the general insurance is grappling with data. We have credible data only for about last 4 or 5 years. Before that, it was jumbled, it was unclean data, it was inadequate data, and disparate format of data. To bring it into a single, analyzable group of data with huge amount of deduplication, huge amount of field traffic, everything is involved to bring it into data. So once you have the data for 5, then you put into big data and start analytics. Because analytics is a huge one. What is the kind of analysis that we are doing? Are we really able to utilize that analysis? Or so we keep on, huge amount of MISs are coming my way. Every office has a huge amount of reports that way, structure, lengthwise, all reports are there. Who is using those reports? Now this is another crisis which the insurance industry is. Do I know in Calcutta how many chartered accountants are there and how many chartered accountants have a car insurance? How many of them do not have a professional indemnity policy? Do I have that data? Do I have a data what is the tendency of the illnesses that is affecting 25 to 40-year-old people in urban area, in rural area, and semi-rural separately? Do I have the data? No. Do I have the data that this is the kind of illnesses that is spread in these kind of areas, and this is the average cost for these illnesses, and this is the way I should be talking to the hospitals? Do I have the data? No. Do I have the data? What is the amount of fraud in the places? About of so much health insurance I pay, claim pay. What is the amount of exaggeration? What is the amount of fraud in that? How many people are really hospitalized? We don't need a hospitalization. How many people are undergoing a lot of diagnostic material processes which they really may not need it? Or the other way around also. They are not being paid for what they really need. Do I have a data? No. Do I have a data in how much of the young people cause accidents or older people cause accidents, and either the accidents is more there on the weekends or there in the on the Friday, and the car which I use to go to office creates more accident, or the car which I use for my holidays create more accidents? I don't have the data. I would like to have this data because these data would help me of pricing the product to the appropriate target audience most correctly. This is another challenge we are grappling with. I have a huge, ripe technology of big data analytics here. I can construct data warehouses. Data warehouses can run huge one, and I don't have to spend a single money for data warehouse. Today, entire data warehouse is available on the cloud, which is not available to me 4 or 5 years. I have to invest on huge IBM servers, mainframe servers, more or more layers to the servers. I have to set up on a huge data center. Today, I just have to tell them the entire thing is on the cloud. I have to pay them on OPEX basis, or possibly a little bit of capital at the beginning, and then I'll have to pay it on OPEX basis. Its availability is there, but where is the data? Do I get a data from the market to position on top of that so I can analyze that? It's not. It's quite rare. It's quite rare. What would be the kind of illnesses that inflict West Bengal traditionally during monsoons? And what could be the average kind of expenses for that? I would love to know as a health insurance, but I don't have that. And if I have the data, my machines can churn the data so fast that within 1 hour probably I can have a huge analytics spread out. But I don't have the data. Another challenge. Another challenge which I again go for is, another 2 minutes please, is the digital adaptation. There have been a lot of telematics. Telematics is one thing which we've been talking about. Telematics is nothing but you have put a software in your car, and the way the car is drive, it keeps on giving us data, how fast this driver is driving the car, how fast he's taking the turn, how much he keeps on braking, and how much he speeds, accelerates, and slows down frequently. So I have a method, internationally accepted method, to grade drivers into that, A, B, C, D. And I can specify in my policy, look here, if you use A grade driver, this is my premium, B grade driver, this is my premium, D grade driver, this is my premium. The technology is available, but I cannot sell it to the customers because it's price sensitive market. Customers are not willing to pay more for these kind of facilities. They say, you give me maximum discounts and you forget about it. Availability of technology and not able to transmit to the customers, like telematics, like GPS monitoring, and just like there are houses which I can put a software into the house which will track the house conditions, whether it is getting overheated, whether there is a leakage, whether there is a gas leakage, or whether there's electric connections are on the loose, which will keep on telling to the insurance companies the data that this house is a risk for fire. It's available in Europe. It's being used by insurance companies in Europe. I'm not able to use it because it's not cost effective for me to buy and give it to the customers at these kind of discounts. Digital adaptation is another technology. I can go on and on, my dear friends, but I have no need to do that. And I take one more, I would like to great gratitude for this major institution in Kolkata, Bengal Chamber of Commerce, for inviting me here. And it was a great experience listening to my colleagues before my speech. And I wish today you will have a lot of things to discuss and digest and deliberate. And I wish this function all the success. Thank you very much.
Thank you, Mr. Sanat Kumar. Now, the session will be open for the question answer session. And before we commence to the question answer session, I would like to ask a few things to, as an observer or even as a customer from that. Another thing that I have observed that we, as a customer, have purchased a lot of things via credit card even. and with a high rate of interest we have paid at some point of time, but we have never come across with a person who has bought uh, say a television set from taking loan from insurance, from his insurance, so from his particularly life insurance. So, and there are many. I had been to different places. There are different kind of awarenesses that still in the rural sector, people have a mind that LIC is the insurance companies, and they are not pretty much aware of other life insurance companies. And people have even asked that whether it's safe, instead of tremendous amount of awareness building and advertisement and all. So that's for the life insurance product part, if any of you can, enlighten me. And from the non-life insurance, sir, I want to really know that you have covered everything, but I have there is a also if you can touch upon something on the cost, because the expense that a company has to make, how the cost can be reduced with the kind of bill which has come up, and this thing, if you can, if you may kindly touch upon those. And then this is my query. If anybody wants to ask anything, many of the eminent people are there. Mr. Patan Ghosh, Mr. U.S. Roy, and all the dignitaries. If you may have any questions, please do ask. So, thank you.
Okay, I didn't quite get your question on the loan bit, but I think we do see consumers, when the policies have, many policies have attached loans services attached to it. But I mean, I would wonder, why would a customer who's really planning to save for a long term would really come to us and break his long term savings thing, or buy a television. I mean, I'm really planning for long term, and I want to save for the long term, and life insurance policy is the last thing that you would possibly want to touch, especially when there are options available. And consumer behavior is actually very, very unique, and each one to his own. But there are people who keep money in fixed deposits at 8%, 7%, 8%, or whatever, and they pay 12% for home loans. Because they see a specific benefit, they want liquidity and whatever else. So each saving instrument that you have it in your basket for a particular purpose, if you will, and you want it to serve that purpose, and that's why you may not break it for buying a television. But we do see some people breaking it to breaking it or whatever. See, one of the other challenge that we have is that if you look at the fifth year persistency of the insurance industry, on an average about 22% of customers pay premium by fifth year. And that's something that I talked about. That's something that needs to change. We can both from the operating model standpoint of an insurer, and for the customer benefit. Now, because from an operating model standpoint, I'm taking all the expense now, thinking I'll get revenue 15 years. I get it only for 5 years, and then you are driven to some other actions as different from building a long-term business. And if you see the numbers lately, there are some encouraging trends which are happening. We are seeing 61st month persistency of several companies breaching 50-55% number, right? And that's very encouraging too. So that's on the loan bit. On coming to LIC bit, LIC, LIC has been there 55 years, and I would not and whatever we are, LIC is very good. LIC is indeed very good at what they do. You can't take it away from them. And like you cannot take it away from us or from any other insurance company. They are indeed very good. I mean, they have the reach. They have taken 50-60 years to build that reach, and it takes. But if I can draw a parallel between insurance and, let us say, banking, right? 10 years back, 15 years back, there were no private banks in the market, and it was all served by state banks and stuff like that. And when banks started, people would wonder whether they would park their hard-earned money. Banks are typically called lenders, but they also take deposits, and people wonder whether they should put deposits in there or not. Today we have banks in the country which are the highest, valuation multiple in the world. which are private banks, and they're serving their consumers. So, there are regulations for solvency, the regulations for this, etc., etc. And I don't think at any point in time policyholders' interest is compromised by LIC or from a safety or some other standpoint, and definitely not. And we pay, we may not be paying, because it takes time for an insurance to mature its business. We pay 93-94% of death claims that come to our bucket. Many insurers pay 96, 97, many pay 90, but they pay, and it's a business model that, and many of these insurers have been in the, they know this business for several centuries. We started, I just noticed, we have something common with Bengal Chamber of Commerce, because my parent company and Bengal Chamber of Commerce started their business in the same year, 1833. Right, so it's that long, right? So I don't think that's really a challenge. But as businesses grow, as you go deeper, many insurers are indeed going deeper, and many of these vehicles of distribution which the insurers are leveraging. Look at SBI Life; they are leveraging in the fastest growing insurer last year, for instance, and they're taking it deep in there through riding on their branches and stuff like that. So, look at us; we're trying to take it to the masses through Big Bazaar stores, etc., which are going deeper, through 1,000 stores in the country. So, as vehicles keep evolving, look at regulator took a baby step in that direction, which is CSCs. It didn't really take off in the manner that it was supposed to, but there is a maturity, evolution phase that it has. Once all of that becomes operational and the operating friction, etc., everything is removed out, you can go deeper, riding, and that's where technology comes in. Right. So I hope I have answered your question. Anything?
Okay, like all seminars, we are running a little late, but unlike all seminars, it's not too late. So we'll take about 3 or 4 questions from the floor. Yes, please. Could you just introduce yourself and...
For last 40 years, agent of National and LIC also. So thank you. This is to Mr. Sarath Kumar. Thank you very much for giving very useful information. In this regard, I want to say only one thing. For last 40 years, I have been seeing. Previously, there was no TSC was there. Now also there. Whenever we go, we can't say 99% discount. When we go, we give say 80%. Somebody giving 90%. Like fish market. So even 99%. You said rightly. Somewhere this is happening. Somewhere, so this is my suggestion that all national company and other company, why not recommend IRDA or TAC that why not reduce tariff rate instead of giving so much 99% discount. So why not make a new TAC, because TAC is also very old. So why not new? No fire. We are giving so much amount. Okay, experience. You see experience also. But this is we shamefully we can't say anything to customers in corporate club. We are saying say 80% discount. Somebody United India, some other company. So so my suggestion is why not reduce rate instead of giving to 99%. Thank you very much.
Thank you, sir. Thank you for the question. Actually, the regulator and the industry is moving away from tariff regime to market-determined pricing. Market-determined pricing. So that would now be going to be trend as much as in every of the. We have now left behind the vestiges of the determined rates, that is the regulated rates behind us. Now only one motor third-party rate is the only rate that is fixed by the regulator. Now the rating has to be controlled by market discipline and market conduct. It cannot be left to a big brother who would see and then control and pull up and all that. Regulator has said that this is the expense of management, this is the solvency margin that you should work in, and they leave it at like that, and it's for the companies to behave themselves. There are industry bodies like General Insurance Council, Life Insurance Council, who are self-regulatory organizations to some extent. So there's a lot of activities going on in that. So there won't be a tariff, but there is a consistent effort from our side to take the prices back to optimum levels. And that is on a positive line, and we hope it would come quickly. But if you have any comfort on that, this has been the trend in most of the markets which has been opened up in developing economies. There has been a trend of pandemonium, period of pandemonium, then some of those insurance companies would completely collapse and disappear, or get merger and acquisition, and the market would stabilize. I think we are moving towards stabilization quite soon. Thank you.
Okay, gentleman at the back.
So Mr. Sanat Kumar stated that every one of the non-life companies are making a loss on the general insurance business. But sir, other than Mediclaim, the other insurance segments are profitable, like fire and burglary. These things are profitable segments. The only unprofitable segment for all insurance companies is Mediclaim. So how is it that the overall profits are completely eaten up by the losses on Mediclaim? Is that the correct situation? The loss on Mediclaim eats away all the profits of all the other non-life segments. And second point is, the gentleman from Future generally said that claims are going up over the last few years as compared to the premiums. And it's touching nearly 100% now. But that really can't happen because claims going up will automatically push up the premiums, because the insurance companies cannot sustain a loss over a long period. So automatically, if claims go up, the premium has to go up. Otherwise, they won't remain in business. So what is your take on these?
I'll answer first. So for me, I meant claim settlement is going up, not claims. Claim settlements are going up. So I was talking about life insurance piece. I was saying the claim settlement is going up. The number of claims that we get and we settle, that number is increasing, and better claim settlement is happening for the life companies. I didn't mean 100 claims are going up, which they may well be, but the claim settlement. I was answering this question on LIC versus whatever else. I was saying that the consumer confidence. Yeah, I was saying claim settlement is going up. That's what I meant, not.
And the question on health insurance, sir, it is the losses in motor as well as health insurance. As you correctly said, the other segments like property, burglary may be making a little bit of profit, but today the health and motor becomes a predominant significant part of the old kitty. So the loss here is not being able to match by this, because the fire is only about 6 to 7%, and other engineering is also. Beg your pardon, sir? There is a market level, market competition, in the sense that we cannot simply, one insurance company or the industry cannot increase the prices straight away. There is some market forces at work. We are struggling. It's not that we are not doing. We're struggling to increase the prices level, control claims, be careful in our underwriting, selection of the risk. There's a lot of activities which is taking place.
Good morning, gentlemen. Myself is Professor Malay Bhattacharya from Globson Business School, Kolkata. My question is directed towards Mr. Mittal. Sir, you said that the population is aging, whereas the statistics says that India has a population of less than 35 years to the extent of 65%. So maybe a little clarification there, as well as what we find is, awareness. You say that the digital revolution has taken place, and maybe everything is there in tight, there in your mobile phone. But then, are you really specifying all these things pertaining to the urban areas? What about the rural component? Because 74% of the population live in still the rural belt. That was not there. And then to Sardaji, I would say, sir, you said that maybe simplicity is the thing wherein lies everything. So, which is very right, sir, which is absolutely right, because these tools, rather these products are very complex, and hardly as we take those, we go through, just like you. When 17 years back you took your policy, maybe after 10 years you had the time to go through it. So there lies a real gap, a real gap. At the same time, I would like to point out that you said that people go through the net and then they come to the real life server, means the physical people called the agents or maybe blah blah people who are really dealing into that. Now, don't you see that somehow what we find is that the agents are not that credible enough, or maybe they are not full of that information. At the same time, they at times sell products which suits their pocket the best. And till to the urban population here in Kolkata, maybe insurance is all about life insurance, hardly we find that people know something, that there is also something other than Mediclaim and life insurance. So what about that, sir?
Can I answer? Yeah. So I think from a simplicity standpoint, like I said, which is I got two statistics I quoted. One I quoted, second I'll quote now. The first I quoted is that the simple product, pay some 330 rupees or something, and you get a 2 lakh rupee cover. It gives you protection of whatever in the Jan Dhan, in the Jan Jeevan, Jeevan Jyoti Bima Yojana of Prime Minister. It's PMJJBY. So that it's called simplicity. So regulator is now going. It has sold more sum assured in the industry than the industry has sold in the last, whatever, was almost about the same, and that's the number. That's one. So that's simplicity. Second point, I was quoting in the context saying that when customers and I was quoting in the context of customers becoming more aware, and that actually, enforces force you to become more disciplined when you approach customer and agents approach customer, and that I think will push the industry in the right direction when you. No, if you look at now, anything, sir, anything that you do in our industry, and I was saying in the morning, anything that you want to do in our industry, it takes time to, in a country like India. So a regulator doing insurance awareness programs, I don't know whether you're aware or not, but every company is now doing insurance awareness program. You have to file a board-approved insurance awareness policy. We are going out and doing all of this stuff. Small, baby steps have already been taken. But when a customer is, and that's research data, when customer is searching online, buying offline, the customer is becoming more aware, and that actually the responsibility, and I've always maintained the responsibility of, it's not always about selling right, it's also about somewhat about buying right too, right? When you're parting with 30,000, 40,000 rupees of your hard-earned money, you should also ask questions, and I think we are moving into an era where that awareness will become more and more sharper. That's two. Third, I quote another data point. There's somebody who sells policies online, protection policies online, right? Term plans online. That company actually will sell next year, this year, will sell more sum assured in a year than some of the largest insurance companies in the company sell, in the country sell. So this awareness and the power of the information in consumer hand will actually also help us push out this other unruly behavior, if I may call it so. And when customer, when agent is saying that, okay, I will sell something to you which you may not need, but I want to sell because I'm making commission, etc. But I think those instances will start coming down. For instance, complaints in the industry have started coming down in the last 2-3 years' time. So things are moving in the right direction. Now simplicity, when I say simplicity, it's easier said than done. At the end of the day, there's a product. I mean, there's only that much simplicity that you can put into a product. But some segments of product that you sell can be made extremely simple for the consumer to kind of understand and appreciate. And I was also quoting in the context saying, there's sometimes when you say something to a consumer, even people who are in the business, they don't understand what you're saying. So just breaking it down into a simple, easy language for a consumer to appreciate, which called in the communication world, it's called B1 language. B1 language is language which 95% of people who read it, whether they know about the topic or not, they understand it. So it's yeah.
Okay, just